Joining me now for a look into the day's market scene is Simphiwe Letlojane from ABSA Investments. Simphiwe, thank you so much for your time today. So the war over in the Middle East still in focus. It's the 7th day today. And what I found quite interesting was commentary out of the U.S. Treasury Department saying they will unveil measures to address rising energy prices, including possible intervention into oil futures markets. What have you made of that? I mean, the real concern here has been shock within the energy markets and how that will then filter through to fuel price costs and in turn inflation.
Yeah, I mean, definitely that is the one thing that everyone is keeping a close eye on. And I mean, as we speak, we are seeing that Brent crude price edging up. Of course, the US does produce oil in and of itself, but certainly not enough on their own to meet their own domestic demand. So there's quite a heavy reliance on, the Middle East and the likes of OPEC Plus, and where a lot of the tensions are currently taking place. So that does remain the key concern overall for markets. And in terms of some of the market reactions we're seeing, probably reacting to that edging up of oil prices that we're monitoring.
Yeah. And, I feel like the war out in the Middle East has been overshadowing some data we've gotten out this week. We've had some important jobs data being released out of the US, and the big one, of course, out later today, with expectations when it comes to those non-farm payrolls at 60,000. That's a far cry from what we got out in January, which was 130,000. Just your sense of the U.S. labor market at its current state. ADP figures, coming through above expectations and pointing to a labor market that's stabilizing.
Yeah, I mean, definitely still quite a bit of resilience. We are seeing a little bit of a slowdown in terms of number of jobs being added. And then the other concern that we do have from a labor market perspective in the US is that it is quite concentrated in terms of where those net job gains are coming from, mainly coming from the healthcare sector, but the broader other sectors not necessarily adding a lot of gains. But overall, still seeing unemployment expected to remain the same at 4.3%. But what is worth bearing in mind in the US is that labor market can move quite quickly because of less stricter labor laws in the US. So should there be any reasons for companies to consider layoffs, they tend to be quite responsive and reactive to that. So those numbers can tick up very aggressively over a very short space of time. But at the moment, seeing quite a lot of resilience still.
And talking about factors that could possibly impact the labor market, there has been concern around AI, of course, and the impact that could have on jobs. We've, seen a number of tech companies announce big job cuts. And I'm wondering whether we'll start seeing, I guess, a structural shift when it comes to the labor market, and if we should start accounting for that as the equity market, right, when it comes to those numbers, looking at the gains, at the losses, etc., etc.
Yeah, look, I think certainly from an equity market perspective, overall, companies will tend to generally benefit from the cost-based perspective, given that the long-term gain of being able to implement machinery and capital towards things that are a bit more efficient should generally bode well. But what is just generally interesting about technology and technological revolutions generally is that even though they bring quite a big shift, if we look at the past, they haven't necessarily always led to massive job losses, but rather just a readjustment of how the labor market effectively looks. Because obviously with these new age technologies, what probably will emanate is new types of jobs, new types of job opportunities. So overall, of course, there will be an impact, but it is still quite unclear in terms of what that pathway might actually look like.
So basically, I mustn't get ahead of myself, ne? All right, let's shift focus to company news. Grindrod out with results today, delivering a 17% jump in core headline earnings. The group also sitting very pretty in terms of cash, declaring a special dividend on the back of contributions from the sale of its non-core assets. Your read of those numbers that we got out today?
Yeah, I mean, we definitely think it's a good set of results, seeing earnings showing quite a strong rebound from fairly low bases last year and a bit of an improvement in momentum. And I think, of course, with all the different challenges that we're having from a logistics point of view
Yeah.
and governments' increased reliance on public and private partnerships, I think definitely the likes of Grindrod, along with its competitors and peers, are definitely going to benefit from that. And so that's what's playing out in the results. So definitely a strong set of results for them. But what we will definitely be looking at is whether they can sort of sustain those levels going forward.
Let's get into your stock pick then. Where are you seeing value at the moment?
Yeah, I think it's a choppy markets at the moment,
Are
of
you
course.
buying the dip?
Very, very, very tricky. But of course, whenever we are seeing, these pullbacks, we definitely always are looking for opportunities to potentially, get some of those counters at a bit more attractive valuations because valuations are pulling back effectively. But the company that we are looking at is effectively Uber. That is my stock pick for today, seeing a company that has quite a strong moat within their operations that they operate in terms of just overall platform asset light model, and also seeing that the company is getting into more profitability going forward, generating quite a lot of free cash flow going forward. So we like that sort of free cash flow generation and the effect that in terms of its life stage, they've gone from investing quite a lot into their platform, but now going into a growth phase from a profitability point of view. So that's what we like about that count. So that's my stock pick for today.
Let's leave it there then, Simphiwe. Thank you so much for your time and taking us through trade. That was Simphiwe Letlojane from ABSA Investment.